Okay, perfect. So here we say our webinar has started. So I wanted to take a moment to just thank everyone for taking the time to join us for our discussion here today, particularly our gracious hosts, the European Microfinance Platform, and particular thanks to FCMB as well as EcoCash Group, who have sent a senior representatives to join us in our discussion today. Today's session will be focusing on leaving nobody behind and how smallholder farmers can be integrated into global supply chains. Specifically, we will be looking at the case studies which we have conducted together with WSBI, which is also a European Microfinance Platform member, into what digital agricultural platforms can do in this space. I am joined today, just to give a quick introduction, by two very esteemed panelists. The first is the head of financial inclusion, which is Adetunji Lamidi from FCMB Bank in Nigeria. They have launched a very interesting product called Easy Club, which has onboarded hundreds of thousands of farmers to date. And they'll be sharing some of their insights alongside myself. I'm also joined by Felix Vengasai, who is from the EcoCash Group in Zimbabwe. They launched a digital solution as well, EcoFarmer or eVaya, which he'll be sharing a little bit more information about. Again, thank you to these two for joining me on my discussion today. So just in terms of where we're coming from and a little bit of an agenda for today, I thought of kicking off our conversation with a small introduction and an outline of why smallholder farmers are as relevant as ever when we talk about financial inclusion and development economics more broadly. Against this backdrop, we'll be asking three questions around why initiatives are necessary, what the initiative is, and what some of the successes and challenges have been to both Easy Club and EcoFarmer. After that, we'll come together and draw a bit of a synthesis of what some of the lessons are. And these are based off of not only the experience of these two very successful FSPs, but also of other FSPs which we engaged in our research. We will then conclude with a discussion and question session where we will take all of the questions, or as many as we can, I should rather say, from the panelists. Please feel free throughout the presentation to note your questions in the Q&A section on Zoom, and any comments you wish to make in the chat session. And then from there, we'll try to respond to as many of those as time does allow. So without any further ado, to make sure we have enough time at the end for discussion, I'm going to jump into our very first topic, which is whether there is still potential for financial inclusion in rural agricultural development. And before jumping into any of the statistics on this slide, I wanted to take us back to just the big picture, which is that on the African continent, just short of 20% of GDP comes from the agricultural sector. And given the labor intensity of this sector, in other words, just how many people are involved, just under 1 in 2 Africans depends on agriculture, either directly for their livelihood or partially for their livelihood. In other words, they farm in addition to doing other services. What we've done here is just pulled a select number of statistics from nationally representative data, the FinScope dataset, which we at FinMark Trust have produced in a variety of countries. These are validated by the national statistics agencies and hence are representative of the entire adult population, except where otherwise mentioned. So talking about, again, why is there this important need and why does rural agricultural development remain so important? Well, firstly, it's the sheer size of the market. So 63% of Basotho, citizens of Lesotho right across the border from us here in South Africa, report that they depend in whole or in part in farming. Over in West Africa, 58% of Beninois reported the same. And these issues are not necessarily limited only to Africa, but of course, we see this across Southeast Asia and Latin America. So pulling just one statistic from a Southeast Asian nation, 49% of Cambodians depend in whole or in part on farming. The second category is that there's a wide variety of unmet needs, many of which are bluntly financial services needs. For example, 35% of Burkinabe farmers reported that they have to sell crops prior to buying inputs. This clearly seems like a little bit of a cash flow problem where it might be possible for financial services to assist. 20% of them report using informal savings or credit to meet these needs. And a large part of the remainder actually just simply keeps cash under their bed. Formal financial services don't really feature. In the case of Rwandan farmers, so this looked only at farmers, 55% reported that they experienced a crop failure in the last 12 months. And this is from 2019 data. This is far ahead of any types of risks they face in terms of illness or other issues. So again, there are things which financial services can tangibly help people with, for example, risk mitigation and resilience management, especially for their crops. But the last one is we can't all just blame FSPs and say, well, they haven't tried. This is a difficult market to access. The average marketplace is about 28 minutes by foot from the rural Beninois household, which is compared to 61 minutes for a bank or an MFI or any other sort of traditional distribution infrastructure for financial services. So simply put, financial services are far removed from many of these rural populations. 18% of Cambodians said they actually felt comfortable with all of the terminology that they are likely to come across if they enter into a bank branch. So about 82% of Cambodians feel uncomfortable when engaging with terminology that's used in the majority of financial services. And finally, only 30% of Congolese indicated they trusted a bank or a microfinance institution. This is due to a lot of fraud and bank collapses that have taken place in that particular country. This is even more pronounced in rural areas. So the very long story short is there's a huge market with a lot of unmet needs, but that is a little bit tough to crack. And a lot of FSPs have tried, many have failed, but some have succeeded. So today's discussion is focusing all on those FSPs that have succeeded, how they have succeeded, what are the lessons they've learned, and what can other people, such as donor partners and other FSPs that want to participate in this space, actually take into account. So in preparation for today's discussion, there were three sort of central questions, as I mentioned earlier, that we asked of our panelists joining us here today. It was, why did the market need your intervention? Why is Easy Club and Ecofarmer or eVia important in the Zimbabwean and Nigerian contexts, in your view, and what are you doing for that market? The second is, how does your intervention work? So what does it actually do? Do you share information? Do you provide financial services? What do you do, and what does this intervention look like? And the last one is, what we have noted in the research is that both of these interventions have been successful. They have onboarded many clients and are moving towards sustainability. So what are some of the challenges and successes that you can share from your experience as practitioners in the field who are building these solutions that others may want to take into account? Now, at this moment, I'm going to invite Adetunji Lamidi, Head of Financial Inclusion at FCMB Bank in Nigeria, to discuss a little bit of the Easy Club platform with us and to respond to these three questions. So Adetunji, without any further ado, the floor is yours, and thank you for joining us today. Please just let me know when you'd like to move to the next slide.
All right, thank you very much, Jaco, and good afternoon, everyone from Nigeria. It's already midday afternoon here. So it's a pleasure for me to be here and to discuss with you some of our initiatives around financial inclusion, and most importantly, how we're trying to integrate the smallholder farmers into their Greek base, most importantly, to digital financial services. As you all know that in Nigeria today, agriculture is one of the major stabilizing factor for the country. And there's been renewed campaign by the government to actually drive a lot of people to the farm so that we can become food sustainable and also ensure that we create what we eat and what we produce. Today, Nigeria is a major importer of major needs. And now government is trying to reduce that. And that's part of what kind of drives our bank to kind of focus in developing the Easy Club platform to support the smallholder farmers. This came as a result of some of the research we carried out by engaging lots of customers while we're trying to drive savings culture between the major distribution network and also, most importantly, among people within the rural communities. We realize that among the major, farming sector, when we've supported the big agri players, some of the funding that we have given to support the wholesale and the major producer of agricultural, activities does not necessarily permeate, to the real primary consumer, who are typically the smallholder farmers. So we realize that for us to be able to ensure that when we support these big players, we also need to carry along the smallholder farmers as well. And that's when we realize that it is important to develop an integrated platform that would actually ensure that we're able to link the smallholder farmers to finance by ensuring that they are able to open account through FCMB and also try to at least save their money, and also ensure that even when their money is saved, what do they use this money for? And I'll go straight into describing, what we have put on these slides, which is the Easy Club platform that kind of demonstrates how the farmer is able to link, to the major input providers and also the other service elements within the agricultural ecosystem. So we developed the Easy Club platform, by 2021, and the idea behind this platform, is to serve, different participants in the agri value chain by providing them with a one-stop shop, for farmers, which enables them to be able to, serve these farmers by creating opportunity for them to transact, sell their farm produce, and also purchase input, while receiving information, that you can obtain from these financial services products. Today, we have these solutions that is working by linking the farmers, to the input suppliers, and also thereabouts enabling these farmers to be able to access, some of the other farm inputs and farm elements. For example, we have an association today that we call the Traxi mechanized provider. So what Traxi does is that it makes a tractor available to these farmers. And when the farmers wants to till their farms or work on their farmland, they can actually access this equipment provider directly from their Easy account by making payment directly, to this equipment leasing company. And then with from the back end, the FCMB was able to credit the input suppliers and also debit, the smallholder farmers, thus ensuring that every of the process is digitalized and they don't necessarily have to at least, transfer cash. So that fundamentally is explaining, what you see on this diagram. It's also very important, to note that while this is being done, the farmers are able to, number one, get SMS alerts on their transactions that happens, and also receives some other, educational information around, when the tractor gets to their farm, and then how we have been able to aggregate them, to make sure that this is possible and this is doable. So Jaco, we can go to the next slides. So I've been explained, basically what this has done for us. It's also very pertinent to let you guys understand, one other major initiative that we have put together, to make this work. That is ensuring that we link agency banking into the space by providing, a distribution channel within the community where these farmers are located. We realize that because of the distance between the bank's branches, to some of these, customers, it is more or less very difficult, to get, access to finance, for them without creating the agency network. And this is what this diagram is trying to explain. We have to now work together with the aggregators, the Agric Association, by creating a second element of agents, different from the typical agents that we are used to. We know for sure within Africa and also across the world, we have agents that are servicing customers within the localities. And what we've done is to layer on another element that is closest to the bank, which is the master agents. So master agents today falls within the aggregators and the Agric Association, and they work hand in hand with us as FCMB to now create opportunity for these farmers to identify, members within their cluster to represent them as an agent, thereby making these banking services possible within the communities where they serve. And through these elements and the cycle, they were able to now get access to finance, get access to some of these other major players, the input providers, and of course, the tractor, mechanized company. So I think that fundamentally, has explained, what we've done within the Easy Club platform and what we're also expecting to achieve. And it's also very instructive to mention that we've also received a very, very exciting relationship and partnership from our partner, WSBI, and the Easy Save organization, who have supported us on this journey. And in fact, the WSBI Scale to Save program has helped us, in achieving some of the successes that we've had in it. And we are now going forward to now, break up into establishing contact with some of these other organizations. We have the crop to cash organization that is working with us. Also, we have the chemical companies, and of course, the fertilizer companies that we are going to be onboarding, as we go into next year. So I can pause here if there are any questions. Thank you.
If there are any questions, we'd be happy to take them in the chat and sort of revisit them at the end. Adetunji, thank you very much for sharing some of your insights on the Easy Club platform. I'll be sure to come back and ask you again about some of the challenges that you've experienced. I've got a few questions noted down for our panel discussion. At this stage, I want to invite Mr. Felix Vengasai, who's the General Manager at EcoCash Group, responsible for the Eco-Farmer or eVia initiative in Zimbabwe. And we posed him the same questions when we were setting up this research document, which is, why did the market in Zimbabwe need this intervention? How does it work, and how does it sort of add value to farmers' lives? And what were some of the lessons or challenges that you would feel comfortable sharing with the audience here with us today? So without any further ado, Felix, over to you, and you have the floor.
Thank you, Jaco, and good afternoon to everybody. It's a warm afternoon out here in Zimbabwe, and we are right smack in the middle of our initiation of our summer season. So we've had some beautiful rains this afternoon as well. When we talk about the Eco-Farmer platform, that was launched in 2014. The need around this had been the look to say, when you look to the agricultural context within the Zimbabwean context, about 20%, in fact to be precise, 17.5% of Zimbabweans GDP is agricultural based. But that same 17.5 also offers employment to close to 70% of people within the Zimbabwean sector. So the necessity to link and have any technology be inputted into the processes across the agricultural value chain led aside to this innovation. One of our key strengths as an organization is we are held by an MNO, which is Econet Wireless, giving us the basis to reach every Zimbabwean and make sure that no Zimbabwean is left. When the EcoCash platform was initially architected, it was a USSD-based platform that ensured that whether you've got a smartphone or not, you can access services through registering yourself as a farmer and accessing services from finance, tillage services, extension services, soil samples, input supplies, etc., etc. We look at it from an entire value chain perspective because we do believe the success of agriculture is basically around a couple of pillars. Finance is one of them, but the technical know-how is also another aspect. The extension services with regards to ensuring that you know what you're doing when you're growing a particular crop is also important. The training is important. And also the link and understanding the use of agro inputs such as the chemical fertilizers and some other initiatives is also important. So looking at that particular platform, we've got over 1 million registered users on that platform, which has been delivering value to them. We have also included weather indexed insurance packages with regards to that particular aspect of our platform to ensure that all the key success pillars for agriculture or that drive agriculture across the nation are accessible at the fingertip of every Zimbabwean who's a farmer, and we leave nobody behind. So we are proud to say that the platform has been growing, and we're developing a mobile app aspect of that platform to ensure that there is a visual user interface, as the uptake of smartphones in Zimbabwe has started to peak and increase. Hence, availability and connectivity with the target users is also going to be effective. So that platform is in the process of taking everything we had on our USSD and putting it onto a user interface as an application or a web-based action, which includes that. So what are the lessons and challenges that we have made? I think in the last 6-7 years, to get to 1 million subscribers has been a journey. To start off, to roll out and ensure that people can appreciate and understand the competitive advantage and the efficiencies that are brought by these platforms. Education and information sharing was one of the big challenges, but we got through that. Traction, we started noticing 2 years within it, around 2016-17, when our platform registration started to really grow. Some of the key challenges as well with regards to smallholder farmers, especially when it comes to financing, is the issue of how best we put through collateral based finance solutions to ensure that everybody else is involved as well. Those are some of the challenges that we've been facing. With regards to onboarding, because we started off as a USSD platform, we saw that the onboarding was exponentially growing because it didn't segregate people that don't have access to a mobile smartphone, for an example. Anybody with any connectivity, smartphone, cell phone device will be able to access these services. So I think when we also add our app, it's also going to include other types of farmers that are coming through, because the definition of smallholder farmers in Zimbabwe has changed from just our rural-based folk. We're actually getting young people coming out of colleges and universities, taking a career into agriculture as producers themselves in a small scale. So they are tech savvy enough, and they also do appreciate and understand the access and uses of applications. Hence, we are going this direction as well. I think without further ado, I'll pause here for questions.
Great. Thank you, Felix, for sharing some of the insights on the Eco-Farmer initiative in Zimbabwe, who has, at the time of publication of the research, at least reached some million or odd clients. It's not a small number. It's quite a significant feat. So what I'll be doing here is moving on through to the conclusion section of our discussion today to just share a little bit of what we found when we looked at not only these two successful initiatives, but others as well, which are available within the research report, which is openly and freely available, and we'll get to where you can find that. On the left-hand side here, we have some of the lessons from the specific case studies we engage, sort of a bit more granular, if you will. And then on the right-hand side, we have here sort of trends that we've observed that are very much in line with other thought leaders such as FAO and IFAD, who have published quite significantly on this space. So jumping straight in here on the left-hand side, the top right, the first thing to note is that digital platforms, and if you're looking at sustainability, are much more than financial services. as both of our participants today have mentioned, it's not just about sort of transacting and getting access to something. There's a big part of it that involves informing and capacitating and supporting farmers as they go through this journey. Adetunji used the word one-stop shop, where Felix mentioned a lot of the information that they share with farmers to enhance and strengthen the capability of these farmers. And for your digital platform to achieve scale, that is really something that must be thought of up front, that this is not just a financial service, such as providing credit or a payment solution, simply put. The second one that we saw across the engagement with all of our different participants in this study is that agent and partner support is incredibly important. If farmers, particularly in rural areas where this might be a challenge, engage with the agents who either don't have enough cash flow or cash on hand to sort of complete transactions, or that are not necessarily clued up with the product, they will blame the FSP. They don't disentangle who, for example, is really to blame. They just have a negative experience, and this can undermine engagement with the product going forward, which then leads to things like dormancy and non-uptake. The third is that financial education and to build capacity remains important. This does not necessarily mean giving money or donations to schools to teach them about, for example, savings behavior, but rather as clients and farmers in particular engage with these digital platforms, there are moments that can be exploited and used to help them understand more of what the product is that they are buying, that can proactively warn them about some risks, etc., etc. So you're educating them about the products and the services which they have purchased and are involved in. And this fosters trust, which, as we saw from the challenges section, is very, very challenging in some countries, such as the DRC, where only 37% have a favorable view of MFIs or banks. The fourth one here in the bottom left corner is local community standing. As Adetunji mentioned in his presentation, getting to the local community and building trust so that they can understand who you are as a provider and overcome some of those warinesses that they may have is very important. So finding local stakeholders to help embed your product into the, I almost want to say, mental or the mind of your target market is very important as well. The second to last one, fifth one, is connectivity and service delivery, which is very important in rural areas. If for whatever reason your IT systems cannot handle the operations that you're running, or your partners such as mobile network operators, services go down regularly in rural areas, you're going to find a situation where that undermines trust. And once again, you're very unlikely to try to achieve the scale which you will need to see your digital platform through to success. I won't spend too much time talking about the ones here on the right, because these have been outlined in a number of different places in the literature, most notably by IFAD, the Food and Agricultural Organization, and many other entities within, for example, the UN system, as well as many other nonprofits. But they are still worth repeating because our studies here do echo and support these findings. The first is that digitization is a prerequisite. It's not going to be possible to build a digital agricultural platform off of a paper-based business. So without digitization, this is simply a bridge too far. The second here is that DIY, or do it yourself, and building it in-house is possible if you already have the reach and scale available. For example, Felix mentioned to us that the EcoNet initiative is within the broader sort of EcoCash group, which obviously works very closely with, sorry, I meant Eco-Farmer initiative is part of the EcoCash group, which works very closely with EcoNet, being one of the country's leading telco providers. Now, that means there's already a significant amount of distribution infrastructure and reach. So they could do something like this in-house and then eventually move towards partnerships. If you don't have that reach, partnerships are, however, critically important, which brings me to the third point. Selecting your partners and making sure that they have the capacity to deliver to the clients you ultimately want to serve is incredibly important. And you will need to think of how those partnerships look up front to make sure all aspects of creating this more than financial services one-stop shop is catered to. Scale is, of course, the name of the game whenever we talk about digital platforms in general, and agricultural platforms are no different. In order for the business initiative to become viable in the long run, it needs scale in order to generate sufficient revenue to keep it afloat, if you want to think about it this way. This is because the actual marginal costs which are involved in individual transactions must be low, otherwise they're going to deter farmers and others from participating within the system. The second to last one is customer centricity is still important. And we've been saying this as a financial inclusion community for decades. And many institutions have started looking at making customers really at the heart of what they do, but this remains important, and it is impossible to achieve scale if customers are frustrated and not at the heart of what it is that is being offered. And the last one that's really worth mentioning here is regulatory and policy alignment. It's important to make sure that what you're doing follows the broad strokes effort of governments in particular, because in developing countries, government plays a very large role in attempting to develop the agricultural sector. We heard, for example, from both our participants, Felix and Adetunji, mentioning the importance of agriculture in their respective countries. And Adetunji even went as far as to mention that it's important for things like food security. So it's from that essential and important need that some of these efforts from the Easy Club platform were derived. Just wrapping up for us before we move into discussions. If you want to access this resource or any of the other case studies that we have produced as a part of this series, you are welcome to do so at scale2save.wsbi-esbg.org. There will also be sort of a link to this just posted in the chat box. You're also welcome to follow social media and to check on LinkedIn. All of the studies are also available there. And this current study we presented here is fresh off the press, so should be available, if not already, on all of these outlets. To just give a little bit of an overview of what other types of topics we focused on, it was on looking at what the COVID epidemic or pandemic, I don't know what it is these days anymore, has done to financial services providers across the country. This was written in November last year. We also wrote a case study on partnerships to serve low-income markets, because many people trying to move into that space still operate in silos. We also have one on digitalization of financial services as a business and how FSPs and large FSPs can think of digitizing different parts of their business to be more competitive. We have looked at, for example, successful use of the mobile phone as a tool to deliver novel financial services, things that might not have been possible before. We looked at this one, which is the looking at agricultural digital platforms as a way to serve a very important niche and target market within the African context. And the last one, which will be forthcoming in early January, will look at the use of data, both internal and external, to develop and engage the low-income market with more success. So from here on, I'm going to turn to just some of the questions to ask to our panelists. And I think I'll start with the Easy Club platform and ask to Adetunji. So one of the things is in our discussion that's emerged is that the Easy Club platform is actively working with farmers to sort of set goals, track their progress towards their goals. Can you tell me a little bit more about this? Because I felt this was quite innovative when you were sort of discussing this with us. Why did FCMB think this is something that should be done, and how's it going at this stage in terms of empowering farmers? Yeah, over to you, Adetunji.
Yeah, thank you very much, Jaco. For us at FCMB, we have some set of goals and objectives, that we have set up, before we even venture into this. Number one is to help farmers, build a marketplace for their products. Second is to create value and making farming an interesting point for female and youth. And while the third one is to encourage savings among smallholder farmers and help to digitize the process. The fourth one, which is more or less what I've mentioned earlier, is to create a one-stop shop for farmers. We realize that, rather than just, going across to meet these farmers and ask them to save money or open bank accounts, there must be some other values inherent in that discussion, which is what other things are we bringing into the table. And that's where we realize that educating these farmers to the level of linking them to a farm place or a marketplace will kind of, help them to grow more, help them to increase their potentials, and also open them up to opportunities to kind of, progress both economically and also in living conditions. And this also came out of some of the research we've done. We have a lot of savings products, that we had tried our hands on, and we realized that while you are trying to do savings, when customers does not necessarily see some value, it is more or less very difficult to convince them to want to do so much, in keeping money aside. So the Easy Club platform had actually helped us, tremendously in, strengthening the trust and creating a more engagement, forum, and also bringing other stakeholders into the piece kind of became a icing on the cake. We now have a reasons why smallholder farmers have a trust in the bank by keeping their money, ensuring that when they are linked to an aggregator who kind of gather them together and give them a voice, it also helps them to protect them from at least being cheated by some input suppliers by giving them less quality fertilizers or other farm implements that they need to kind of at least grow their farms. And this, at the end of the day, give us a kind of win-win situation. Today, we're now kind of been able to onboard as much as close to 450,000 farmers within the community, and we are now going ahead to sign agreement with some of the other providers that we are trying to bring on board. The tractor companies today is currently ongoing. We are now also advancing to the level where we are trying to link the self-service solution to the platform. What self-service does is that the Easy Wallet account that we had initially created, we are now trying to ensure that the USSD platform is able to also help, the farmers to be able to do direct, access to some of these interventions that we have mentioned. It's also very instructive to mention that while we create the Easy Wallet account, we are also carrying out a lot of BVN engagement. BVN in Nigeria simply means biometric verification number, where we link the accounts to a biometric verified number as stipulated by government. What this helps us to do is that while the Easy Wallet account is a tier 1 account, the other Easy account that is a Nubank account, it's accounts that enables them to keep as much money as possible once their BVN is captured. And then they've met all the requirements for the KYC. So that's at least some of the other processes that are ongoing, which enables the farmers to have a full life within the stakes, and then they can as well be able to at least enjoy the privileges of banking, enjoy access to all the other value chain players within the ecosystem. Thank you.
This is actually a great response. Thank you so much, Adetunji. I see we've got some questions coming in from the participants. I'll turn to these in a moment because I wanted to ask you just a little bit more around the philosophy and a little bit of the view that FCMB took to the sort of the value chain approach, because it really, when we discussed yesterday, it was about finding a win-win-win situation for everyone involved. I don't know if you wanted to describe a little bit more around, for example, how the warehousing system, et cetera, works in particular, because this was key in creating those win-win situations for everybody involved and to achieve sustainability.
Yeah. Thanks, Jacko. For sure, a lot of farmers today, they suffered from not having adequate storage for their products. And from our relationship with some of the major agri player, Babangona, in times past, we realized that when you have an off-taker that kind of aggregates farmers into a kind of a community and helps them to, in the area of supply of their farm inputs, help them to kind of at least educate them on the kind of farming situations or approaches to actually more or less grow more of their products. They can get more yield and they can also be able to harvest, much better. So we realized that within this space, when an off-taker is able to take some of this farm harvest and keep it for a certain period in a storage, they tend to make more money, when they sell, not necessarily during the wet season, but during the dry season. So a lot of farmers today have been opened up to these opportunities, and they've kind of at least been wowed when they realize that they've made so much money over what they've used to make, in times past. So this is kind of the advantages of this relationship, joining this ecosystem or helping farmers, by aggregating them under an off-taker who would actually help them within the space. Thanks.
Excellent. I'm going to quickly turn with just two of our questions that were pre-prepared for Felix as well, and then I'll turn to the open questions which we have around in the Q&A log, because I think these would be great questions to open up to both panelists. Felix, so I wanted to turn to you and to hear a little bit more. If I understand correctly, the eco-farmer and eco-cash initiatives relied quite a bit on sort of EcoNet for distribution and sort of quickly achieving scale. But I wanted to hear a little bit about whether you had considered to work with other partners, and how perhaps in addition to that, this scale which the EcoCash group helped you to rapidly reach these very, very impressive numbers of clients. So to summarize, if you could tell us a little bit about whether there are other partnerships and how those played out, and then what the sort of key advantages are that came from within this, this location that EcoFarmer occupies within the broader EcoNet, EcoCash, etc. family.
Yes. Thanks, Jacob. With regards to that, our EcoFarmer initiative is basically looking at a seed to fork initiative with regards to the agricultural value chain, meaning that with our reach as being partners with EcoCash, and also in the same group, on the group of the EcoNet Wireless, gave us some of the key fundamental blocks we required to penetrate the market. However, being in an agricultural industry, we needed strategic partners that will enable us to sort of give an entire total solution from seed to fork. So we partnered with major seed houses in the country, fertilizer and input providers in the country, chemical suppliers in the country, banks and financial institutions, logistics partners. We also have on our app tractor aggregation platform, where partners with regards to everybody who's got a tractor in Zimbabwe, after they've finished doing their own land preparation, they can come onto the platform and be able to actually meet and interact with others that will require that very same service. Similarly, with our logistics solution through our buyer initiative to ensure that product is moved from point A to point B, we've also partnered with institutions in the educational sector so that we can provide content and extension services per particular crop and per particular value line to ensure that it assists and helps the farmers as well. We've partnered with insurance because when you look at agriculture, it can be very risky when you've got climate being at the mercy of the climate. We literally produce out in the climate. So we've brought in insurance for crop insurance so that we can actually ensure that if any of the perils that have been insured for within our ecosystem of farmers, they will also have a fallback position as well. We are in the process of working on credit guarantee, which is actually going to enable and increase more financial inclusion with regards to smallholder farmers who sometimes KYC with regards to finding partners. So in terms of partnerships, it's a very broad look at the partnerships that we're having. We keep building on it to ensure that not only are we going to be doing this for local, but also start to also have eco-farmers being a bedrock to also ensure that smallholder farmers have access into the very lucrative export market for fruit and veg into the region and internationally as well.
And then one last question for EcoFarmer before we turn to sort of open questions, which we'll answer as a panel. But how did you go about sort of building trust and building those relationships with farmers? Because I would imagine that there was some existing relationship with EcoCash, perhaps, that was sort of very useful, etc. But how did you go about building the sort of trust with farmers? Because again, judging by the successful numbers of the EcoFarmer initiative, people use it, they trust it. So how did you go about building that? I mean, we heard from Adetunji that it was very much through those local communities they partnered with, etc. I'm very curious about the approach that EcoFarmer adopted in this regard.
Thank you for a very valid question. We were very fortunate enough to have been a spin-off out of our MNO Econet Wireless, which is a trusted brand, which brought mobility in terms of mobile phone and connectivity into the country when there was none to start with. And then the EcoCash solution also ensured that there was financial inclusion across the board with regards to enabling each and every Zimbabwean to be bankable and ensure that they can have the convenience of transacting at their fingertips. So when you're standing on shoulders of giants like that, when you then launch another solution that's actually targeting and ensuring that you bring together a particular industry such as agriculture, you are literally living off the goodwill that has been created by the previous successes that has happened. So for us, that was a very key advantage and a privilege to actually launch on the back of such other successful initiatives as well.
Excellent. Thank you for the response. It's quite nice to see you've got sort of two different sort of approaches. You've got the launching off of a very large customer base, and then you've got the sort of construction of a system in the case of FCMB. So two different approaches, both of course achieving significant scale. So it shows that you can do it yourself or you can partner to achieve the scale that you need. So now I'm going to turn to some of the questions we got from the floor. The first one is, what would be a good number of farmers for an efficient platform? The question came from Bertrand Nora in Paris. I think from the research, my immediate knee-jerk reaction would be to say it depends on what you're offering. So if your platform is offering a number of services and there's a number of things that are available, this would sort of drive up the cost, both in terms of the development of the platform, maintenance of the platform, etc., which could lead to a slightly larger number. But if you're sort of starting out as a partner, an FSP that's selling to, for example, an established mobile money offering sort of as pinning into the back end, that could be quite different. So I don't think there's a golden number, but it essentially comes down to a sort of a balancing between the costs and the revenue of that in order for a break-even point to be achieved. I will, however, open the floor to the colleagues, and perhaps I can start with Adetunji and hear if you have any advice from the perspective of a practitioner who has built this type of thing. What would be a good number of farmers to achieve efficiency within the platform?
Yeah, thank you very much. I think from what we have seen, really, it's important to have scale in mind because even when you deal with some of these other partners, what will interest them is the number of people that will be in need of those services before they can actually come on board. And one of the things that I've seen, even from our experience, is the fact that we're able to show them the opportunity to scale and the fact that this what we have built has a lot of potentials. And I remember when we were talking to the tractor hiring company, we had initial challenges of convincing them to come on board when we said, okay, we have this categories of about 500 farmers who are in need of the tractor. And in a particular location, they were asking us that we need to aggregate these farmers in the large, community space with a large number, such that if they have to move their tractor from maybe the northern side of Nigeria to probably south, they must actually make money, and there's opportunity for them to actually see value in it. So I would say that at least, a scale of between 50,000 going to about 100,000 is something that makes money. And also, by the time they now start seeing, potentials of those numbers, for sure, I think most of the partners will key into it. One of the overall vision goal for us is that we have an ambition that by 2025, we want to have, included about 5 million farmers on the platform in Nigeria. Thank you.
That's a very ambitious goal, but I have no doubt you guys are going to be achieving it. And then we'll be asking you to tell us more at the next conference on how you managed to achieve these numbers. If I can now turn over to Felix, I don't know if you would like to make an addition on what would be a good number for an efficient platform, or perhaps any considerations that you would like to share in response to Bertrand's question. Felix, the floor is yours.
Well, thanks, Sako. I think I would align with what Aditunji has mentioned with regards to those type of numbers as a start, but also depending also on your operating environment. Here in Zimbabwe, farming and services and trust is more of a word of mouth type of issue within the communities and the farmers. So you find that if you've got adequate representation in each and every agricultural community that's there, and your services speak for themselves, you may start off with as little as 1,000 or 5,000 people on your platform, but then the exponential growth of registration due to the word of mouth and experience and on the platform would also be able to really help to scale you up. And then for partners, you do need significant numbers, probably within the 50 to 100,000, 200,000, because you also then at the end of the day have to offer a certain value for partners to come and participate on your platform. So I would say the first initial port of point, if I look at it from a step-by-step perspective, is to create the customer base with regards to the farmer registration, offer some services. You must have a bundle of services to start off with that are probably within your control. And then as you scale it up, you now have a value proposition or a unique selling point to attract partners onto your platform because there is a mutual benefit that will come out of it. So those numbers will vary, but then I would think first step is to have some services, create a vibe around it and ensure that people trust it. Word of mouth will roll, registrations will happen, and then you start onboarding partners because you can offer value. Thank you.
Thanks so much for your contribution, Felix. So I guess to summarize the answer to Bertrand's question, our sort of experts have indicated it really depends on achieving a sort of a little critical mass that makes it viable for others to join your platform because you have access to so many farmers, you have that distribution components in place, and that's where the viability and efficiency will then eventually come in. So there is no magic number, and it will sort of depend every time on local context. I'd like to take one second question and then conclude with a final question for our panelists. One is around the challenge of collateral for access to finance, which is well known for when you're working in sort of lower income markets where probability of default can sometimes be a little bit high. The question is there any way to provide coming crops or crops not yet harvested as collateral? And if so, how is it working or how could it work? From my experience, what I've seen is we haven't seen the crops themselves in the research I've done yet to be offered as collateral, but we have seen that many FSPs that have seen crops come in regularly from their clients allow them to use it in terms of good faith. So the FSP will not show up and seize the crops should you not pay, but because they've seen that behavior, they do allow the cash flow emanating from those crops to be used to credit risk score you, etc. So to allow you access to credit. I wanted to open the floor perhaps again first to Adetunji and hear if you had any additions on this thought, either from the Easy Club experience or a bit more generally as an expert in the field around whether it's possible to provide use coming unharvested crops as collateral. Adetunji, over to you.
Yeah. All right. Thanks, Jacko. I think from the little experience I've had in that regard, I think it's only dependent on the kind of relationship that you have with the aggregator or the off-taker. I remember we had experimented with a particular agric association company known as Crop to Cash, where we provide some lending fund to farmers. And then what they used this for was to demonstrate the capacity to kind of pay back based on their the produce of their farm. And we now make sure that the fund did not go directly to the farmers in cash, but paid to some of these input providers, like the man that supplied fertilizers, that supplied them with farm implements like cutlasses, hoes, and chemicals, to also, put in their farm and also for tilling the farm. So eventually, we now hold the the organization accountable to ensure that this money is paid back. So that's the only example that I have, that's close to that, to say, okay, there was that kind of guarantee that these farmers have actually more or less, done the planting, and of course, harvest is coming. Thereafter, they can take some of this harvest and use it to pay back the loan when that has been sold off. That's the information I can share now. Thank you.
Thanks, Adetunji. Felix, I don't know if you would like to contribute on this topic of whether there's ways to use crops as collateral. I don't know if eco-farmers in this business yet, but I'd like to hear your thoughts if you have any.
Thanks, Jacob. With regards to using crops as collateral, it's not quite there yet, but there are some solutions that can come there probably through forward invoicing, and then using the proceeds of that particular forward invoice as a particular collateral of sorts. However, it sort of works well and better in aggregator type models, where farmers are aggregated into a group and then they approach financial services from an aggregated and group perspective, and there's critical mass with regards to what they can or cannot produce as well. And then once they are participating in that extent and they've got some contracts within that, you find that the back-to-back and shoulders of the season normally dovetail with each other, ensuring that there's a level of comfort for continuous financing within that particular issue. So it might be a little bit of an issue at the start, but once a relationship has been created with an aggregator or an off-taker, you realize that that back-to-back sort of financial KYC and crops that are coming from one shoulder to the other actually then keeps the cycle working very well, and then it de-risks the entire model, rather than funding or having one individual coming through as a smallholder trying to use their small pocket of crop as a collateral to a particular access to capital. Done in a group, in an aggregator model, and relationship built, that seems to work very well here in Zimbabwe.
Indeed, we've actually seen these aggregator models. Now that you've mentioned them, the bells ring in my head. We've seen them as quite a successful approach in other countries, and I just struck a blank on it. Very, very, very valid addition. As we move to the end of our discussion, I thought of asking a bit more of a blue skies question to our two panelists. If you were given either a sizable investment, or you could change a regulation or legislation, etc., what would you want to do to really take the inclusion of farmers and drawing them into the financial services sector and into your platforms respectively in particular? What would you do to take it to the next level? For example, would you want to invest in sort of more data analytics? Would you want to invest in sort of more distribution infrastructure? Would you want to change the way that it's governed, etc.? So if I could turn first to you, Adetunji, what is one big wish you have for the vision or future of Easy Club, and what would you ask of the world to sort of make it a success?
Yeah, thanks, Jaco. I think for me, it's what's critical is about connectivity and ensuring that at least these farmers have access to use some of these digital solutions, specifically because of the widespread nature of Nigeria. There are still lots of these local communities that are not well connected. So if we have access to telecommunication connectivity, it actually enhances the opportunity for the farmers to connect to their bank accounts and also have access, via the agents. Secondly, is also, to provide a kind of a subsidy to help farmers, in the area of, increasing their potentials, to develop their farmland, and also helping them to actually scale. I think these are two major, areas of support that I currently have in mind. Thank you.
Sorry, I left myself on mute. And Felix, over to you for an answer to the same question. If we could take off any constraints or do something that would really help push the inclusion of farmers forward. What do you think, and in the context of Zimbabwe, would be the most useful?
Thank you for that, Jacob. Within the context of Zimbabwe, connectivity is quite good. I think the incremental improvements that we carry on doing. The largest opportunity lies around big data analytics with regards to the nature of services and advice you give the farmer. We need to actually tune our advisory service level to an extent where almost at a local area perspective, you can be able to actually push through a message to a farmer to tell them if they would like to spray today, it might not be a good idea because there's going to be rain within the next 2-3 hours, thereby saving on their chemicals, because if you spray right before the rain, you're going to have to do that again as well. You'd like to also be in a position to actually be able to influence the patterns of agriculture within the nation and ensure that each and every hectare under production is being used to its maximum capacity utilization and efficiency, depending on the natural ecological regions that it follows through. This can only be done through the information we are currently getting through our weather indexing, the information we are getting through the mapping of soils on infrared digital satellites, the information we are getting through the usage of chemicals and fertilizers that the farmers are currently doing and practicing. Eventually, that will start to put through an analytical data point set that will enable for us to be able to give much more personalized and tailor-made advice and advisory services, thereby bringing efficiency, increasing yield, and return back to the farmer, and everybody within the ecosystem will benefit likewise.
Excellent. Thank you, Felix. This is an excellent contribution. I think here we are approaching the end of our session, so I do not want to eat into the time of our subsequent colleagues that will also want to be presenting. Just to note in parting, what I found very interesting from what Felix and Adetunji shared here is that both of these constraints and sort of things that we would like to alleviate are not things that can be tackled by FSPs alone. So just as we've mentioned earlier, digital agricultural platforms are not just about financial services. The solution is also not just about financial services. And if the message we can give for those walking away, it's very important to understand financial services as a critical, necessary component of developing rural agricultural markets and bringing farmers into those global supply chains, but it's not a sufficient component. Without financial services, it will not work. With only financial services, we won't have enough. So I really want to take the time to thank everyone that came and stayed all the way until the end of our session. Again, this paper has just been launched about smallholder farmers and digital economies. You can find it at scale2save.wsbi-esbg.org, along with all of the others, or you can look on Twitter or LinkedIn, WSBI-ESBG, or you can email any of us at these email addresses here. Thanks again to Felix and Adetunji for joining me for this discussion. It's never better than hearing from practitioners in the field who are living this day to day. And with that, I close our session. Thank you all very much for attending.